And listen, it's not fun to watch. I mean, listen, I did my best. We were in Dubai together. We did panels together. We've been, I've been on here many, many times since I made that call last year. And I do hope, and people, at least on Twitter, they said, hey, listen, when you made that call, I actually did exit. So if I saved a few people, that's fantastic. I would have liked to have helped out more, but it is what it is. And we'll get a better buying opportunity on Bitcoin for the next big run. So you just got to be patient, deal with the pain. This is a normal cycle in Bitcoin every 4 years. Many people talked about elongating cycles. I never saw it. There was no history of that. Many people talked about on-chain analysis as being important. And I always said, when fear takes over, on-chain analysis, like fundamental analysis, means absolutely nothing. So great to be here, but let's get right into it.
Yeah, so we're currently speaking right now. Prices are moving up and down every second. $29,000 is around the current price at 12 o'clock noon Eastern time. We briefly grazed $24,000. I thought, it was close enough to call Gareth back on to talk about his 20K call, because I won't even be in studio next week, so I didn't want to miss it and then not have a chance to talk to you. But we're close enough. So your calls more or less has become a reality, albeit for a very brief moment overnight. I've told this story to you many times on air, but I'm going to revisit that story. I had somebody stop me on the street and say, oh, your Gareth Soloway interview, he's been calling for 20K Bitcoin. I exited, but I lost so much gains. And he was upset. And I don't know if I still have his number. I think I'm going to text him back and say, look what happened now. Did you exit? But yeah, I'm just going to note the negative comments first. I'd like you to address these, because people are still saying, well, Gareth's been saying this for a long time. I don't understand his technical analysis. It's easy to make a call, pull a number out of thin air and just stick with it. Everyone's right, at least, broken clock's right at least twice a day. All these, skeptics out there calling you out. He's been calling this for a long time and it hasn't happened. Well, it's finally happened. He just got lucky. So let's address these concerns. Yeah. Yes, you have been saying it for a long time. You've been saying it during a bull market as well, but you had your reasons. So let's revisit your technical analysis here.
And this is fantastic. I'm glad you brought this up. So number one, what we have to recognize is that when you saw the November and October highs of just piercing $65,000 on Bitcoin, you have to make a note that the hype was ridiculous. They just launched the futures ETF at that point, and this was right in the midst of a big blockchain conference that we were at. So the hype was there driving it, and it was all retail. And the way you knew it was retail is because when it briefly got above the April highs, it didn't hold, and it kept on coming down and down, and it tried again, and it kept on coming down. And when you had that much hype and it wasn't able to hold above the 65K highs for more than a day, it told you smart money was selling. Then you look at things like this, right? You knew that the Fed, well, number one, inflation was coming. The Fed was going to have to remove all the liquidity in the market, or at least the stuff that they put in. That's insanely bearish for risk assets. It was a no-brainer to start to see this thing come in. And also, when people are saying, oh, it took like 6 to 8 months from his call for it to come down, let's keep in mind that if you look at previous cycles on Bitcoin, from the high to the lows, it's usually 12 to 18 months. So you have to, nothing goes from 65,000 low, well, except for Terra Luna, right?
We're going to talk about that.
Yeah, but nothing in general goes from like the all-time highs to like a 20,000 low, 65 or 69 to 20,000 in like a day or two. So you have to let the cycles play out. We're unfortunately not done going down. I still think we will tag 20 and probably even go lower than that before this cycle is fully over. Couple other cool stats, David. Number one, remember the Super Bowl this past year, how many crypto commercials there were? Go back to the .com Super Bowl in 2000. It was the same thing. It was known as the .com Super Bowl because all these .coms had paid like $1 million to do their ads. Another interesting factor, in November, the market cap of all of crypto was 3.1 trillion at its highs. The .com stocks all combined, 2.9 trillion. So there's these weird similarities. And then I know I've talked to you guys about this before, but if you look at the Amazon.com chart from 2000, when it topped out at the .com bubble, it is literally picture perfect to Bitcoin's chart here as well. Now, remember, Amazon went from $112 there all the way down to $6, and then it went to 3,800. So there is light at the end of the tunnel. I am a very strong long-term bull on Bitcoin, but you just have to accept the cycles. We can't force our emotions on the crypto market. You have to just trade what it gives you. And in this case, it was telling us. I mean, anyone who said that it wasn't telling us, it was just their emotion clouding their judgment.
I have a lot of follow-up questions for you based on what you just said, but let's go back for those of us watching the program right now who may not have seen our earlier interviews or perhaps have but just don't remember. What was your reasoning back in November for the $20,000 call? Let's just erase half of the chart right now. Let's just block out everything that happened after November and just look at what happened up until then. You're looking at the technicals and something told you something's not right. Right?
Yeah,
what was that?
So a couple things. Number one, you can see here, and this is super important on the chart here. Let me draw a trend line in. So if you take this high from March and April of 2021, and what you see here, and this is a technical tool that I use on a daily basis to tell if something is a real breakout or a fake breakout. All you got was one daily close above and then a reversal, one daily close above and never a higher close. And there's something called the confirmation signal that I've created. And basically what it tells you is that institutions and big money play games with smaller investors. What they do is they like to take out previous highs, which gets the small investor to think it's a breakout. And what they'll do is they'll reverse it back down. Now, the way you know it's a real breakout when it stays above and closes higher and higher 2 times over is that it takes too much money for the institutional money to manipulate that once it stays above for too long. You get too many people in the trade and pushing against them. So they're not going to risk billions of dollars on a reversal and maybe lose. They do it very short term. So that was one of the signals. The other signal, again, was just the bottom line that we knew that the government was just printing money, sending checks out to Americans. We knew that the Federal Reserve was doing what they were doing, that inflation was coming. And back a year ago plus, the Fed was all about transitory. Transitory was the only word. In fact, I did a tweet where I said, every time you hear the word transitory at the next Fed press conference, you do a shot. And basically you would have been dead because you would have had alcohol poisoning at that point. But the bottom line is I said, it's not transitory. They're going to have to react more aggressively and pull all the stimulus back. And that is going to take you down. Now, in terms of the $20,000 target, it's very simple. Just look at the 2017 high. You have that pivot right there. That's basically what I saw it going to. Ultimately, you have to take out these lows, which we've already done. You can see we're down here on the chart. But again, that's my highest end target. I hope it stops there. I'll start to accumulate a hodling position there, but I will expect to continue to add below that level if need be.
Remind us again, Gareth, why did you pick the previous all-time high as your downside target? What was your reasoning?
Yeah. So interestingly enough, and a lot of people will point this out and they're correct. We've never had a bear market where we've retested the previous high of a cycle, right? So we've never retested. So it somewhat would be unusual, but then you have to counter trend that with the fact that you've never had a Bitcoin bear market where it hasn't gone down 80 to 85%. Well, 80 to 85% is about 12,000 on Bitcoin. So the way I did it was I said, okay, well, what's my conservative target? I think in the very least, the cycle takes you down about 70%, which gets you there. And then again, maybe it goes lower, but at the bare minimum, I think we hit that support, which will be major, major support for Bitcoin.
So you're basing this off of what Bitcoin has performed or has done in times past. So just basing this off of history, and this is a question I've asked many people, including yourself, just basing this off of history, it looks like we're headed for another crypto winter, which is the idea that, can you zoom out again, please?
Yep.
It's the phenomenon in which cryptos are large, but Bitcoin in particular right now, we're looking at Bitcoin. Bitcoin goes down and stays down for an extended period of time. Look what happened after post 2018. It just stayed flat for many years, and we've had a number of macro factors that drove it up, of course, but eventually it went back up. But is that happening again now? Once we retest, suppose you're right, suppose we retest $20,000, I'm not concerned about it, going to 20,000, because if you're bullish, it'll just bounce back up. I'm concerned about it staying at 20,000 for 2 more years.
So, in all fairness, you have to think that, right? I mean, what's to say that this cycle will be different? In fact, I would almost be a little concerned that it might be a longer cycle. So I think for instance, number one, I think you have to look at 2017 December high, and then it really didn't start we didn't take out the previous highs until basically 2021, right? So you're talking about 3 years of kind of sideways chop. Now, there were a lot of great trades in between there, but before you took it out. So I think you have to be thinking to yourself 2 to 3 years where, before it takes out 65,000 or 69,000 again. The only other thing we could possibly do, and again, you're right, technicals, when you're a technician of the charts, you're basically a student of history, right? And so what I would do is I would say, okay, well, let's go to the NASDAQ 100. And let's go all the way back to 2000 when the dot-com bubble burst. How long did it take, all right, for the dot-coms to recover? All right. In fact, I actually have to go to my weekly chart because it's that long. And this is kind of freaky, right? So, and we hope, and listen, I'm a Bitcoin bull, so I hope this long-term doesn't play out, but it took the dot-coms, the NASDAQ 100, all the way until 2015. So 15 years to recover. Now, I don't think that's going to be the case because the things that are ruling Bitcoin, number one, it's getting adopted more and more. So that shouldn't be the case. And then you also have to look at the fact that Bitcoin is an asset that is a stated max run versus the dollars that will continue to be printed in the next recession after that. And so ultimately, it's going to be a store of safety. So my guess is it'll be 3 years. But I think it's important to just note what happened with the dot-com, since we are referring to that as kind of the ultimate winter cycle in stocks.
I'm just going through my Twitter, by the way, as we speak. Yeah, I don't think it's fair to say that nobody believed you. I think this one comment summed it up quite nicely. I think everyone believed him, but nobody wanted to hear it. So that's a different sentiment altogether.
That is true.
Moving on to your long-term forecast, you are long-term bullish on Bitcoin. Remind us again, what's your long-term thesis?
All right. So the long-term thesis is just the basics that, you have a government that, yes, they're pulling back on stimulus now because inflation's 8%, 8.5%. But we have to remember that this is already pushing us towards recession. I think inflation comes down to probably 4 to 5%, but it's going to be sticky there. The Fed will say, okay, well, as long as unemployment remains at under 4%, we're fine with that. We're going to continue to fight inflation. But unemployment is not going to stay there. You're going to see unemployment start creeping towards 5, 6, 7, 8, 9%, 10%. And that's going to basically say to the Fed, okay, well, now you have inflation at 5 or 4%, but unemployment's at 10. We now need to stimulate by printing again and lowering rates and doing everything again. So it's going to be a whack-a-mole. It's going to be which one is worse at the current time, which is which one are they going to attack. But the bottom line, the long-term thesis is that Bitcoin, blockchain technology, it is here to stay. If you want to see the coolest chart ever, and I love showing this, guys, here's your Amazon chart, and that's a trend line for Amazon that I've been trading off of. But I want to show you this. This is the .com M top on Amazon, right? And you can see what it did. So that looks scary, right? From all the way up here down. But if you go back and you zoom out on this chart, look at this. Now look at what that is. See that? That's what we're referring to as the .com bust. And this is, again, what I think eventually Bitcoin can do once we get through this period. So again, there is light at the end of the tunnel. It's just very, very messy.
12 years of stagnant prices, Gareth.
Well, again,
I'm not saying that's going to happen with Bitcoin, but that's not hopium right there. I mean, eventually sometime down the line when I grow old, Bitcoin will go up.
But think about this. Think about if you're patient.
I'm joking. It's yeah.
But I know, and imagine if you're patient. I know you're super patient. You're waiting for,
Sure.
You might have a little Bitcoin, but you'll dollar cost average all the way down to 20 to 18 to 15. And then imagine this is your low, $6 on Amazon. And then imagine if in 20 years it's worth 30, 38.
Right.
Whatever multiple that is. I mean, I don't even know what multiple. I think you're okay. You're probably sitting in retirement with billions of dollars at that point.
Yeah. I think I did ask you.
Hopefully, the dollar doesn't keep depreciating because billions may not be that much at that point.
Well, I mean, $1 billion worth of a depreciating asset is still a pretty good number to have. I like to see that many zeros at some point, even if it's Zimbabwe dollars. That still looks impressive. That was another joke. Gareth, okay. I think I did ask you in Dubai whether or not you'd be comfortable leaving Bitcoin as a store of value in your wallet just for 20 years and not touching it. I think your answer was yes. Correct me if I'm wrong, but I think your answer
yes.
So I think that does support.
And again, it's important for people to understand I'm more of a swing trader, so I'm much shorter term. So,
right.
I really look to kind of buy lows, sell highs. And then eventually when Bitcoin gets low enough, then I will tuck some away and just kind of, throw this amount of money in Bitcoin and just let it sit there for like a retirement type thing.
I know you want to move on to other assets and we'll get there. Just close off on Bitcoin. So I think you did mention to me at one point in one of our prior interviews as well that you could see Bitcoin going lower than $20,000. Potentially targeting the $10,000 mark. So I'm just asking you what's next from here, because first of all, we're not exactly at $20,000 yet. To be clear, we're close, but not quite. But you did tell me that if it goes to $20,000 exactly, you'll be buying with quote unquote both hands and feet. So I'm just wondering how you're trading right now.
Yeah. So number one, there is a level on Bitcoin where I'm swing trading it right now. So I am long Bitcoin. I can just quickly show you guys on this. I love charting with you guys because I think it's the coolest thing. But I just erased that line because I want to show you guys this one. Let me just zoom out here. If we take this high right here and connect it to right here through this high and through this high right here, and then we drop a parallel line down, look at what you get. All right, so look at this low right here. We just touched this low here, all the way through here. So again, there is support here, but this is just a swing trade on the chart at this point. Excuse me. In terms of my longer term projections, right? So the one thing we have to kind of recognize here is that Bitcoin could go below 20. And as an investor, I need to be prepared for that. The downside max target I have. So minimum target's 20,000. The max target, you take this high to this low, it's $36,000 drop. You take this high, subtract 36,000, you get 12,000. So 12,000 is my low end target.
It's your absolute low end target.
Yeah.
Okay. But you're still comfortable buying in at 20,000, or are you waiting for 12,000 now?
No, I'm definitely okay buying in at 20. And just to be clear for everyone, I don't have a crystal ball. I don't know the future, right? So what I'm going to end up doing is what I've been trained to do in stocks, which is you start looking for support at a level, you buy a small percentage of what you want to ultimately own, and then you basically space those buys out. So I might buy like, $20,000 worth at, 20,000, another 20 at 18, another 20 at 16, and kind of all the way down that way to accumulate.
Yeah. The other crypto. All right. So thanks for that. So let's move on to another crypto. The other crypto making headlines is Terra's Luna. So the UST, which is the stable coin from Terraform Labs, has depegged from the dollar. Its sister coin Luna, which is used to maintain the peg, has completely collapsed. It fell 97% in the day, and then it fell another 95% after that. So it was at $87 2 days ago. Now it's at 2 cents, not even. You mentioned that most things don't fall 97% overnight. This is one of the outliers.
Yeah. And basically, so it's important for number one. I mean, there's a couple very important lessons here. Number one, any investment can do anything at any time, which is why position size or the amount of your portfolio you dedicate to any position needs to be really thought about. Right. So I'll admit right here that I picked up some Terra Luna when it was like around the $30 to $40 level. But as soon as I saw that there were some issues there, I said, okay, I've only got this small percentage. I'm not adding to it. And that's it. And this way, what ends up happening is you might lose that investment, but it doesn't wreck your account. And that's so important to understand, folks, because, we're in a stock market now where things are just dropping by integers, like 10% a day over and over again on some of these tech names. And it's getting nasty. So you have to allocate properly. But the bigger thing on Terra Luna and the UST is that it actually influences the stock market. Number one, it's very, very bad for crypto, right? So we talked about deleveraging back in October of last year. I said that would be the cause of a drop in Bitcoin down towards 20. We are seeing that obviously happening. But when you see this kind of, there's already skeptics on the crypto sector, right? Elderly Americans, elderly people all over the world, not everyone obviously, but even a lot of institutions, the government potentially. And to have an issue like this is not healthy for the crypto markets. In addition, it's very destabilizing. You already have a stock market that was in free fall. To have something like this, remember, the same investors that own Terra Luna, that own Bitcoin, that own Ether, that own Solana, they're the same investors that own Tesla. They own some of these other stocks. And so when they get margin calls in crypto like this, they're going to sell some of their stocks, which then creates a waterfall effect in all of assets. So this isn't just kind of an isolated thing anymore. You could look at this as a contagion, and I would almost guarantee the Federal Reserve is keeping a very close eye on this.
The Federal Reserve, yeah. I don't know I don't know if I had an interesting conversation the other day with somebody on this topic in great technical detail, and he said something that struck out to me. He said, when things are going well, nobody wants regulations. Everyone wants decentralization. Nobody wants a central authority. But then when something like this happens, everyone wants the feds to step in and say, "Hey, do something to protect us."
Yep. Yeah. You need regulation. I've been saying it for months, is that, one of the reasons why I have multiple crypto accounts is because there was a point where someone jacked my SIM card and they actually got into my crypto account. Luckily, there was an account I didn't have funded. But I mean, if someone does that and steals your crypto, you don't get it back. Now, if it's a stock account, FDIC insurance. If it's a banking account, FDIC insurance. You need these good things to come in. You need good positive regulation. Now, yes, there's bad regulation, but crypto needs regulation. You cannot have issues like what we're seeing with UST and Terra Luna going on. It is not healthy for the environment of crypto, nor the whole economy. And by the way, one other thing, what's really bad about the crypto markets here is that you have a situation where a lot of 20 to 30, maybe 40-year-olds, they had all their money in crypto. These are the people that a lot of them, they can't afford. I mean, this is like the money they're just starting to save for a house. And you can't have these people. I mean, it's one thing if you have a retiree that has millions of dollars and they lose 50,000 in crypto, but when someone just has 50 and they're all in on crypto, bad scenario.
And it's not just that. That's a great point. I was going to ask you about investment psyche as well. A lot of these people who are in cryptos just got in 2 years ago or 3 years ago. They're very very recent market entrants. Some of them just got in during the pandemic. Some people had stimulus checks come in and they're starting to play on Robinhood. So this is the first time they've experienced a market wipeout. Everyone was a genius 2 years ago and a year and a half ago. What do you think this is doing for the average retail trader on their psyche? What's going on in their minds right now?
So this is unfortunately doing exactly what every cycle occurs. In 1999 and 2000, lots of people jumped in late in the game and bought into the dot-coms only to see their money get wiped out. It was commented for the next 7 years, where's the retail investor? And finally, the retail investor came back when the market seemed to go up every single day. They came back in 2007 only to get wrecked in 2008 and 2009. And then really until the pandemic, I kept on hearing on all these stations, well, where's the retail investor? The retail investor still doesn't trust this market after 2008, 2009. Well, guess what? They came back in 2020, 2021. It seemed like it was a casino they couldn't lose. And now look at what happens. And this is the way it works, is that these investors many of them will be gun shy going forward for many, many years. When they should be buying at the lows, they're going to be too gun shy because of getting wiped out prior.
This was a meme. I me's not that funny, but it was a meme nonetheless. It was like, where everyone was jumping in at $65,000. No one's buying at a 50% discount.
Yep.
When you think about it, that's illogical, but that's exactly what's happening, and you're absolutely right. The psyche does play a big role into it. We're all scared getting into it now. We've been burned. We don't want to be burned again. But things are looking pretty close to your downside target, Gareth. If you could tell the viewers one or two very important lessons that they could take away from this saga, from all the way back into 2021 through the hype and the crash, what would these lessons be?
The biggest lesson is, if you cannot control your emotion in investing, then you need to turn off social media and any stations out there that are pumping, right? You have to be careful, because social media now with Twitter and some of these others, FinTwit and all these other things, it's really amplified the hype more and more, and it will amplify the panic and fear even more as well. And that is not good. You need to kind of have a thesis going in. One of the biggest lessons I learned as an investor early on, and I took a lot of losses before I learned this, is that I need to know, number one, how much money am I willing to commit to any one trade ahead of time, not once I'm in the trade and I decide, oh, it's going against me, let me double up, triple up. It's all right, what is my total amount initially? Then you put in a percentage to start and you slowly dollar cost average in. All right, if you're right off the bat, great trade. It goes in the money. You might not make as much, but you're protecting yourself. Protecting yourself from downside is more important than trying to just make millions overnight.
Very good point. Okay, let's move on to the stock market now. Stock markets have stabilized today. We haven't been seeing huge moves just today, but again, it's just one day. Oh boy, let's zoom out. Yeah, there we go. I spoke to you, I think 2 weeks ago. Have your views changed on the stock markets? Do you foresee further correction in the tech sector? I know we're looking to NASDAQ right now, and things haven't really changed all that dramatically. Things have been moving still down on the downside, but are you sticking to your downside target? Is my question.
Yeah, I am. I am. Now, again, be clear. I actually think we're due for a bounce. I've been accumulating a lot of these beaten down, tech names, Roblox, for instance, some of these names that have been just decimated like 85, 90%, but it's just for a technical bounce. And I think Roblox today is having a tremendous bounce. There's so many of these that got overdone to the downside. And now, Roblox is up 20% today. Roku's another one. Roku had decent earnings. And by the way, folks, at this stage, you're probably a little late to the party to be jumping on. I mean, maybe on Roku, it still has some upside, but the point is that ultimately the Fed isn't going to step aside and not raise rates by 50 basis points next month. It's going to happen. So you have to be ready for that. It's going to continue to suck liquidity out in the near term. Bounces will come. Bear market rally bounces are programmed to make you believe it's a new bull market. Sell into it. All right. When you make a good chunk of change, don't get greedy. Take half off the table, put a break-even stop, do everything you can to protect yourself in a bear market. Look historically at bear markets. They don't end in a couple months. So December was when we topped out. It's not over yet. Okay. So again, doesn't mean you can't make money, but you got to be nimble, take your profits off the table, and then wait patiently. Worst case, you miss a good trade. I'll tell you again, there's been plenty of times where I've missed trades, but there's always another one coming around the corner.
I want to just narrow down on that key point you said. Take your profits off the table. I mean, when do we know when we should take our profits, Gareth? I think that's something that most people struggle with. Doesn't matter what your experience level. People never know exactly when to take profits. Well, some people do, and they do quite well. So what's your rule?
So there's a couple different ways that I figure it out. Number one, once I'm in the money 10%, I almost will guarantee you between 10 and 15%, I'm always taking some off the table. And the reason is because 10%, especially on a swing trade in a short amount of time, is a great gain. What it does is it frees up capital where if that stock or that market comes back in, you can always rebuy. Or if it continues up, you end up making 20 or 30 on the remainder, but you want to always pocket some of that profit. The other way to do it is also just looking at resistance. So like, here's the QQQ. See this low pivot right here? All right. If we were to bounce, let's say we get a big bounce in the markets. We're at 290 right now. If we go back to 310, this is a no-brainer. This is telling you there's resistance right here. So that would be another way to look at it. And I know this is getting into more educational stuff, but I do encourage people to start learning a little bit. I think it's hugely important to being able to time your exits a lot better. And it's also fundamentally safer than just believing that you're going to make millions and it's just going to keep on going up forever. All right. Things never go straight up forever. We see that in asset prices now, just like in general, unless there's a major issue, they're not going to go down forever.
Yeah, people have been, I've been reading Reddit, going back to Luna real quick as an example. People have been saying, I made a lot on Luna. I just didn't get out because I got too greedy. Now I'm in the red. So I think, yeah.
I was just going to say so this is the tricky thing with Terra Luna is that basically what I read is that it's basically like a stock having to dilute. So to prop up their stable coin, they have to basically print more and more Terra Luna. Exactly so I think they're now at like 3 or 4 billion and it was just 300 million. And so the problem is it's going to be very hard for that to bounce higher significantly when it's so diluted. So it very well could bounce at some point. But again, you can't be expecting it to go back to $50 in my opinion. It's not going to happen.
That's an excellent point. So, yeah, short-term, people have been buying on the bottom. Short-term gains probably not going to happen on Luna. Let's finish on gold. Say what you want about gold. Maybe it hasn't performed as well as Bitcoin over the last 2 years. Maybe it doesn't go up 10x over the course of 3 months, but it certainly doesn't go down 97% overnight. I mean, I dread the day that gold goes down 97% in a 24-hour period. I don't even know what the world would have to do to make that happen, but let's hope that doesn't happen.
Yeah. So again, you know that in December I said it would be the best performing asset, and certainly gold has been that compared to Bitcoin in the stock market. And in all fairness, gold hasn't done a whole lot. It's up a couple percentage points, but the bottom line is it's comparing to down 25% on the Nasdaq and down how much on Bitcoin at this point. So sometimes being safe and putting your money where it's not going to see, like you mentioned, seeing gold decline 90% is very, very, very unlikely. That's the safest place to be. I also think that gold has broken out. So if you look at the 70s chart, I'm not going to go over that now with you guys here, but the 1970s where inflation was the last time when we saw it where it is, it was almost identical. You had 2 years up, 2 years of consolidation, and then it broke out. Here it's retracing exactly. I think the last time we talked, I said it was going to do this. And then the next move should be to the upside. So you should see a big move coming in gold, my guess, over the next 3 to 6 months. I think, again, year end is still potentially $2,400 on gold.
$2,400 on gold. So bottom line then, you think you're still sticking to your call that gold will be the best performing assets this year, because $2,400 on gold, what is that? That's a $600 move from current levels. That's, if I'm doing my math right, about 33%, 30 to 33% upside from current levels. I'm assuming you don't think Bitcoin or stocks is going to see the same amount of upside and percentage gains by the end of the year?
No, not at least getting back what they've already dropped, right? So they would have to, now Bitcoin would probably have to go up like 60, 70% into year end. So no, I still think bottom line, end of year, you have the NASDAQ, the S&P down for the year. Bitcoin will be down for the year. Gold will be up probably at least 10, 20%. I mean, maybe as much as 30.